you are welcome to this lecture. In this lecture, we are looking at session 2 of Unit 4. And session 2, we are looking at ascertaining, recording, and assessment of internal control systems. Ascertaining, recording, and assessment of internal control systems. At the end of this session, these are the objectives that must be achieved. You should be able to describe the types of internal controls and the control procedures normally practiced in business entities. So these are the objectives that must be achieved at the end of this session. Now, ascertaining internal control systems. In doing so, you have to look at examination of the previous audit work. You need to get the client's own documentation of the system. You have to also perform interviews with the staffs involved in the organization. Then you have to as well trace some transactions to ascertain whether the controls are being working effectively. You have to also examine the client's document to see if the controls are being put in place, and then observation of procedures, how things are being done. You can as well go to the premises of the organization and observe the procedures being followed in arriving that. When you're able to do this, you ascertain the internal control systems within the organization. Now, recording the systems of control. Recording the systems of control. There are several methods that can be used to record the system, and some of those methods include the narrative notes. And when we talk about the narrative note, the purpose of the narrative note is to describe and explain the system at the same time as making any comment or criticism which will help to demonstrate an intelligent understanding of the system. So that is what the narrative note deals with. Now, the second method is the organizational chart or the organization chart. Now, this chart provides a convenient way of describing the authority, responsibility, approval, and reporting relationship that exists in the organization. So this is what the chart does. It describes the authority, the responsibility, and approval and reporting relationship that exists within the organization. The third method has to do with the internal control questionnaire. Now, with the internal control questionnaires, they are used to ask whether control exists which meets specific control objectives. So just like we know what the questionnaires do, we have a set of questions that is being asked the respondent, and these questions are to test whether controls that exist within the organization actually meet the objective, the control objective. So that is what the internal control questionnaire does. Then we have the flow chart and the other diagrammatic presentations. Now, the flow chart can take many forms, but in general, they are graphic illustrations of the physical flow of information through the accounting system. So that is what they basically do. So we have a flow chart and other diagrammatic presentation. So it's a graphic illustration of how information flow through the accounting system. Now, the flow lines represent the sequence of processes, and the other symbols represent the input and output to a process. So we have, as part of the flow chart, we have the flow lines, and the flow lines, they represent a sequence of processes, and then the other symbols on the flow chart, they represent the input and output to the process. Now we can have an example of a flow chart, like the receivable flow chart is an example of a flow chart. Now we have the risk and control forms as the other method. So we have forms of risks and controls that are being established in the organization. So if you have a risk, what are the forms that you have to fill, and what are the control measures that has to be put in place? These are the methods that are used for recording the control system. You have the narrative note, organization chart, internal control questionnaire, the flow chart, and other diagrammatic presentation. Then we have the risks and control forms. Now, evaluating the internal control systems. We want to evaluate the internal control systems. Now, in the recent years, many auditing firms have developed and implemented an evaluation techniques more concerned with assessing whether specific errors or fraud are possible, and then rather than establishing whether certain desirable controls are present. So that is what they do, and they do this, or they are used to, these evaluating forms are used to determine whether there are controls which prevent or detect these specified errors or omissions. So what they do, are they control procedures? Are they control measures that prevent or detect the specified errors or omission? And then it is also used to achieve by reducing the control criteria for each transaction stream down to a handful of key questions. So we have the internal control questionnaires there. So they ask those questions to try as much as possible to reduce the transaction stream down to a handful of key questions, which are the control questions. Then we have the characteristic of these questions is that they concentrate on the significant errors or omissions that could occur at each phase of the appropriate cycle if controls are weak. So the internal control questionnaires that were being asked, some of the questions, the focus is on the significant errors or omissions that might or could occur at each stage of the appropriate cycle, and if the control system are weak, then they try as much as possible to make it stronger or improve upon it. So let's look at the internal control systems. An example has to do with the purchase expenditure cycle. The purchase expenditure cycle. So there are reasonable assurance that the goods or the services could not be received without a liability being recorded. There's a possibility that the goods would be received without what? A liability being recorded. So there are control procedures there. Then you have to ensure that the receipt of those goods or services is required in order to establish a liability. So if you have received a goods or you bought a goods on credit, then you ask yourself, if you receive those goods, is it going to establish any liability? Then we have a liability will be recorded only for authorized items. So if the item has not been authorized, you have to check the internal controls to see if there has been a proper authorization before a liability can be assumed. Then a liability will also be recorded at the proper amount. You don't just record it at any amount at all. It has to be the proper amount. And then you also have to check if all payments are properly authorized. So the control procedures, who is supposed to authorize the payment, have that been done before the payments were finally made. We put in control measures there, or to test for controls there. Then you also have to evaluate whether all credits due from suppliers are received. All credits due from suppliers are received. So if you are to go for goods or funds from your suppliers, have you actually received them for a liability to be recorded? And these are the things that we look, or they are example when you take the purchases or the expenditure cycle. You have to ensure that there is a reasonable assurance that all these items are actually taking place and properly authorized. Now there are more to this. When you take the sales cycle, there is one, inventory and code. Try as much as possible to read the manual and get the understanding, the concept of this, because if you don't read, you won't get the understanding. And I keep telling you that you have to read and read. You don't read once and expect to get all the understanding. If you are a shark, you can get that one, that is fine, but you need to try once, twice, then it will stick. So in this session, we have been able to look at the types of internal controls and the control procedures normally practiced in business entities. So these are the control um, procedures we have to go through in this session. As usual, continue to read. See you in the next session. Thank you.